Let's also talk about what all of this has meant already for the oil market on this equity side and what we have seen from a lot of the large cap oil stocks and smaller stocks as well. Brian, you've been crunching the numbers here on how oil stocks have done this year. And, we've been talking about the rotation, right, out of the sort of work from home trade into the back to work trade. Energy's been lumped up in that. But when you looked at the figures, it was sort of surprising just how well some of these stocks have done.
Yeah, somewhat shocking. I understand oil. The old saw here is that oil stocks move in concert with oil prices, and oil prices look like they are destined to go above $80 a barrel. Hence, the stocks are moving. These companies can make a lot more money. But Julie and Myles, as you both know, how many investors have come on the network so far this year focusing on ESG efforts, saying oil companies are not being properly run, they need to get more green, and yet I'm looking at some of the stock price performances year to date within the oil companies inside the S&P 500. Marathon Oil, absolutely shocking. One of the best performing S&P 500 stocks of this year, up 125%. Diamondback Energy, oil company, right behind it, up 96%. Occidental Petroleum, which is interesting because this company has long been fundamentally struggling after it made some acquisitions there. Its stock is up 81% on the year. And then, Julie, another interesting one, Exxon, which has been struggling too, really questioning. A lot of folks on the street are questioning the CEO Darren Woods, his leadership. You had the board shakeup. Its stock is up 58% year to date. So oil traders or investors are going back to that old adage or old saw that, you know what, maybe it's time to play these oil stocks as oil prices look like they're going even higher.
I would just add, and you guys talk about this a little bit in our Slack channel about the inflation implications of all this. I mean, I feel like this very cleanly outlines the story here. We would sit here in 2014, 2015, right? And you'd have every crank, this side of the Mississippi talking about how we're seeing deflation in the U.S. because oil prices were collapsing, and now you get the same people talking about runaway inflation because oil prices are going high, but that's why they back oil out of most of the inflation data that the Fed and other policymakers pay attention to. And I think the fact that, Sozzi, you're rattling off several S&P 500 companies that are up 70, 80, 90% so far this year, they're all in the energy space, which is a space that investors have absolutely hated, has been a complete dog. But we all agree that this is not a growth part of the market. I mean, it pretty clearly outlines why it's a transitory impact, right? Why this is something that has come up in the market, both in the real economy and in the stock market itself, and is expected to eventually cool off on the other side. Not even bringing up the fact that for all commodities, there tends to be a cycle which runs in concert with the overall economic cycle. And given that we are now in the beginning of a new growth phase, well, here you go.
And Myles, worth mentioning too, and I neglected to mention this, as we've seen this latest push higher in oil prices, two stocks that have not been working the past month, GM and Ford, two of the most hottest stocks in the market this year, both down about 7% over the past month. And you ask yourself why. It is very simple. Over the past 2 years, GM and Ford have minted money off this push into SUVs, crossover SUVs, and in the case of Ford, it's pickup trucks. But now if gas prices are on the rise, and they in fact are, if oil prices are likely to go even further, and it seems to be the way, you might see folks clamoring again for sedans or smaller cars. And you know what? That fits right into the business model of a Tesla or even a Toyota.
Well, and it's going to fit into the business model of GM and Ford, right? Going in a little bit further out as they expand their suite of those electric offerings. I mean, it's also interesting to me, as we see this reopening, we're seeing sort of regrowing pains, if you will, whether you're talking about travel by car with these gasoline prices growing up or travel by air, where we had on Thursday and Friday those TSA folks going through TSA security for the first time, surpassing 2019 levels once again, at a time when we're seeing a lot of sort of friction, if you will, in air travel, right? Delays, cancellations, problems there. So as we see this reopening, and this is something we have talked about for months, right, that it wasn't necessarily going to be smooth. So you wonder now, if we're going to see this increase in gasoline prices, what that feedback loop is eventually going to look like. It feels like consumers still have a decent amount of runway here to pay those higher gasoline prices for now, but we'll see if there is any sort of demand destruction as they continue to push higher.